Breaking news, stocks don't only go up. I know, a surprise, especially if you've been living through the 2020 and the 2021 stock market. It seems like the post-pandemic hype is starting to wind down. The fundamentals of companies are starting to matter again. As I've often said on Twitter and on Instagram, growth stocks are awesome to invest in on the way up, but they tend to get hit the hardest on the way down, as we're seeing now. Everybody thinks they can handle volatility until the negative side of volatility starts to show up. Here are 9 growth stocks that are down over 64% from their all-time high. Number 1, we have Robinhood, which is down over 87% from its all-time high. Number 2, we have Lemonade, which is down over 82% from its all-time high. Number 3, we have Opendoor, which is currently down over 75% from its all-time high. Number 4, we have Roku, which is down 74% from its all-time high. Number 5, we have Zoom, which is down 72% from its all-time high. Number 6, we have Rivian, which is down over 71% from its all-time high. Number 7, we have Zillow, currently down 67% from its all-time high. Number 8, we have Teladoc, which is down 68% from its all-time high. And number 9, we have Shopify, a popular growth stock in 2020 and 2021, which is currently down 64% from its all-time high. Crazy, crazy. This market has been insane. It seems like the hype is completely out of the park now. 2022, the stock market is starting to come back to reality and the fundamentals are starting to matter again. Now, don't get me wrong. These companies could come back to make all-time new highs. That's not out of the picture. And if that's the case, many of these stocks could be great buys right now. But I do want to add in that many of these stocks only reached their previous highs due to all of the hype that was in the stock market over the last 2 years. The one thing you want to keep in mind with growth stocks is that growth stocks have more volatility and with that risk. Again, everybody loves growth stocks on the way up, but now that we're starting to see the risk or the downside of the volatility, everybody's starting to run away from them. Warren Buffett said it best. He has a famous quote basically saying that in the short run, the market is a voting machine, but in the long run, the stock market is a weighing machine. In other words, buying and selling stocks in the short run is kind of like voting for a stock. Like if you like the price of where a stock is at, when you buy that price, you're basically voting in favor for that valuation, compared to when you sell at that valuation, you're voting against it. In the short run, news and emotions are going to impact the prices of stocks at any given day. However, the health of a company, the overall health of its revenue, of its profits, or even its losses cannot be ignored over the long run. The fundamentals of a business will eventually emerge, and the stock market will start to properly weigh the company based on its real valuation. For this exact reason, this is why picking individual stocks is so difficult. It requires you to see past all of the daily hype and deeply understand how the company makes money, what the company's plan is, and how the company might play out over the long run. At the end of the day, if you can't handle this volatility or just this uncertainty of investing in individual stocks, you're likely better off just investing in index funds. I'm a big fan of investing in index funds, and index funds are at the core of my personal portfolio. Index investors sleep better at night because they don't have to worry about the day-to-day market fluctuations in the stock market. Index investors hold a broad basket of stocks and get to capitalize on the overall stock market movement rather than just the individual stocks. Well, that's it for today. I just wanted to make a quick video on these 9 growth stocks that are significantly down from their all-time high. Let me know in the comments what you think of these stocks. Are you buying any of these stocks? Do you think they're appropriately valued now? Or do you think they're still overhyped and might have room to continue to crash? Let me know in the comments. I love to hear from all of you. And thank you so much for watching. I really appreciate it.